All right. Now I think I'm ready. So welcome. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders who's ready to trade CPI. Yeah, consumer price index today. Fed tomorrow. Big events. These are big events. So anyways, let's get on with it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, my name is Wayne. I'm a currency trader. I'm an economist. I'm a trend trader. I'm a lover. I'm a fighter. Yeah. So anyways, everything macro, even micro's okay. Love it. Technical analysis, love it. I like to scalp spot, swing, trade, position, carry. So if you have questions about a particular technical indicator, if you're interested in how the fundamentals work, if you have a trader psychology thing you want to bring up, yeah, let me know. I'm here to help. I've learned a few things over the 20 years that I've been doing Forex. And I knew a few things before Forex too. So cool. Let me know how it can help. Yeah. I even passed the Series 3. Yeah, it's required. Yeah, required. And you know what they teach you? How to be a grain elevator operator and use futures and options to hedge your risk. Like, this is required to be a professional Forex trader, huh? Yeah, Kareem. So it's just a licensing that's required. And then you got to get a Series 34. But anywho, kind of interesting. So I've done a few things. I got some experience. Let me know how it can help. And I am happy to do so. And today's live stream is going to be focused on CPI coming out in, 25 minutes. In the description below the video, there's a link to my book. You might want to check it out, Strategic and Tactical Forex Trading. There's a link to a free hour and a half, I think it is, webinar on how to use fundamental analysis correctly. There's a link to FX Bootcamp, which is a community of Forex traders focused on learning how to be a trader. So there's training on trader psychology, technical analysis, monetary policy, macroeconomics, oil trading, swing trading. Oh my God. So 88 hours of stuff. It's good stuff, like college lecture stuff, not just me babbling. You get that every day for free. Cool. $88 a year. Good price, bro. Yeah, good price, bro. Then what? There's a link to Quant-in-a-Box. It's a service that I started that automates the process of gathering macroeconomic data on your behalf and then analyzing it for you. Yeah, so it's a way to automate your fundamental analysis. It's really cool, man. And I got some like wicked smart stuff coming in the near future for that. There's also a link to tradersway.com, a trustworthy, ethical foreign exchange broker. Yeah, there really is one. One that doesn't trade against you. See, there was a time when the Swiss National Bank actually lied to the entire world, pulled the plug, and a bunch of brokers got caught holding the bag. The tide went out, and guess who was naked? They were apparently trading against their clients, and they went out of business. Traders Way, in that same moment, was perfectly fine. And I'm like, oh gosh, that's really cool. That's really cool. So that's the moment through their actions that earned my loyalty and respect. And other brokers, much bigger brokers, went out of business that day. Wow. So anyways, I recommend Trader's Way. Why don't you check them out? TradersWay.com. Check them out. So that's a lot of resources. Okay? That's a lot of resources. You should be empowered. Okay. So we are starting today on my line. This is what we've been talking about for days and days and days. And this area, let's do it in a brighter color. This area is an area of risk. And in this area, I have an assumption that bulls will consider selling their long position. It doesn't suggest bears are going to enter. Why not? Well, this is a bullish move, depending on your definition, right? Like, for example, you might use the 2155 cross as a definition of bullishness. 21 is clearly above the 55. Here's the 21 now. Here's the 55 now. So in that definition, you could consider this a bullish market. Another way to do it is higher high, higher low, higher high, higher low, higher high. That is the definition of an uptrend. Okay, so on and so forth. So this doesn't suggest bearishness. It suggests bulls take profit. Bearishness might develop if there's a reversal pattern up here. Well, we're not there yet. But boy, we say here that there's a confluence of resistance. So again, way back on the first day of June, we had this idea that if bulls take over up in this zone, okay, no bears, bulls, then the likely extreme target, or what I say aggressive target, for the month is that price. Okay, we call that an out of position trade, because a better bullish trade would have come down a little bit lower, but nonetheless, it did what it did. It's fine. And under that circumstance, that's the price you would expect. Okay, fine. Now, let's go to another look. Okay, same thing. Based on a buy zone here for the week, that target is here. So we have this overlap of monthly expected target and weekly expected target. And I call that an Arctic turtle, not because there's a confluence, but an Arctic turtle is when the turtle sticks his neck out beyond the first target to get the higher leaf, right? Stretches his up, and then what happens? Snap! Gets his head chopped off. And so you could have sort of a down, and then maybe this sets up for your reversal later today, later tomorrow, later in the week. Okay, so once again, it doesn't say sell if you're a bear. It says sell if you're a bull, meaning if you bought way down here somewhere, the risk of a reversal is increasing, and many bulls would probably consider taking profit up here. Okay. I named this years ago, this zone, a pivot profit zone. So it does not mean bearishness. It means profit taking. There is a difference. So we will have to watch that. What an amazing price for the S&P 500. And it is respecting it. Yeah. Okay, oil's bouncing on our price. beautifully drawn way out in the past. Past performance does not predict future results. But a couple of things went into this analysis yesterday. One, we were here before and it held. So that's price-based support. Market-based support comes from this idea of this is the weekly sell zone. Okay? And the target for that trade plan is here. Okay? Oh, yet another out of position trade. OOP, out of position. And so, yeah. So we came down there and it held. Oh, faux show. Okay, oh, for show. Okay, it held. And we're going into the meeting in now, CPI now in 15 and a half minutes. So we have that coming up. So get ready for volatility. Okay, now we've already discussed all this, but I suppose we can do it again. Okay, if you're going to trade it from a bullish point of view, I would probably consider this a range and not a trend. So you could delete your 2155 because there's no trend. The trend is sideways. So in that case, right, they're not going to help. So your first target would be 71. Your best case scenario is probably 74. Now, of course, it's entirely true that it could just kick off these moving averages and break. But how could you possibly know that? You're like, well, Wayne, I'm a genius. Okay, yeah, but there's nothing on this chart that suggests that. That A, it's going to work, and B, that you're a genius. So you have to look at pure support and resistance. Okay, so I see some there. I already marked that out. I see some up here. So I've got that marked out. So, you know, what would be more likely, I think, is something like that. And that will continue forever and ever 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 until it breaks. Okay? If you want to filter this, you filter it. Okay? If you want to filter it with your bias, right? Let's say you're a bear. Let me do it bearishly. If you're a bear, you're going to have, well, you might look at this if you're an aggressive bear. You're going to look at that as resistance. You're going to look at this as a resistance, and then you're going to look at this as resistance, okay? So you have a plan A, B, and C. A, B, C. Which one's going to work? Well, nobody knows, so don't ask that question. Okay, so if this now goes up on the 4-hour to about 69, which is we're getting fairly close, then you drop into a smaller time frame, like a 5 or a 15, and then you look for a reversal pattern. You sell, and you jam your stop. And if you're right, no, I don't think that's a high probability setup, but you would need to analyze your risk tolerance and your level of aggression. Okay? And off you go. Second one would be have it go higher and do the same thing, drop into a smaller time frame up here. Or if it goes up to here, drop into a small time frame. Your best case scenario, if it goes all the way to plan C, is you never get an entry. You wait and you almost sold it here, and you almost sold it there, and you almost sold it there. Okay? A bull did that already down in this area, and it's right. And now their choice is to buy dips like that or just allow it to break this entire range, and right, so that might just be the trade of the week. Okay. Okay, but pretty obvious, right? You don't have to be a rocket surgeon. So again, based on the pattern I see, just technical analysis, it seems this is a pretty interesting first area. This shouldn't be a problem if you're a bull. Now, if you're a bear, that's an entry. And if there's lots of bears, then bulls get wiped out. So we don't know that. Energy Minister of Saudi Arabia wants oil prices to go up. Okay. Interesting, huh? So maybe fighting back. But I see this as very logical, technical analysis. Okay. In fact, if you are a member of FX Bootcamp, I think what you see going on here, is not only a counter trend trade that I explained technically, it's the only counter trend trade I explain. Can anybody confirm that? Yes, sirree, Bob. Yeah. It's the only counter trend I teach. So, yeah. 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 Heard it before many times. Yeah. So that could be interesting. Especially if we are told something tomorrow that indicates the pause is a little bit longer term. Everybody expects a pause. Everybody expects language of more hikes. But if it's interpreted differently, it could be very bullish for future demand, and that would push up prices. Right? Oil. Quantity, price, demand, supply, equilibrium. Shift demand. New equilibrium. Okay, so you go from quantity 1 to quantity 2, which shows you demand went up. And in that scenario, equilibrium price went from P1 to P2. Price went up. So, if we're not going to go into a deep recession, or we're going to recover from our recession quickly, maybe oil prices go up. The thing is, I believe we have enough supply. Okay. So if we are demanding not as much and supply is also going up, okay, then you can have a double shift. That's where it gets complicated. Sure, Kareem. Yeah. Well, the OPEC meeting was just, what, a week ago? And they had to go it alone there. But that's the idea that if OPEC members want oil prices to go up, they need to cut production. Okay, about 6.5 minutes to CPI. Let's do a quick poll. Hang on, almost ready. All right, let's see what you guys are thinking. While you do that, I think we should look at, I don't know, euro dollar. I think everybody likes euro dollar. Okay, right on a key price. I would definitely mark this. On the upside, there's this, and then the one above that is here. I want to make this the 4H. Make that an H4. And I want, on that one, I want monthly. So I can see where we're going. This is kind of like a radar, an AWAC. Then over here, I'm going to make this a 15. Okay, and there's a confluence going on there. That's okay. I'm going to move this to a 5er. Suppose I can change this to a 1 hour if I wanted. Now I want to keep an eye on the 4 hour 21, 4 hour 5. Okay. Remember this black line here, the dark black line, represents the first selling price a bear can consider. Now it's not the most ideal, but it is what it is. By the way, do you think I can build AI that can predict CPI before it comes out? I'm going to say as expected. But wouldn't you like to know that, let's say, 5 days in advance? Grace says, but will it be correct? Well, we don't know. But the thing is, what if it was reasonably correct? Like, for example, if you were going to try to guess what GDP is going to be when it's released, wouldn't you just look at consumption, investment, and net exports and calculate GDP on your own the same way the government does? right? You're like, well, you just do the same calculations. Okay, get ready. May CPI. Time is it? Oh, we still have about 90 seconds. Meanwhile, I'll give you the link. All right. Got a little bit of volatility going. Okay, let's break it down. Yeah, all over the place. So consumer price index month over month is as expected. So I won there. Sorry, I'm doing two things at once. All right. Year over year, 4.0 as expected. Yeah, look at this. Okay, yeah, okay. CPI down quite a bit there. Yeah, I believe it looks good enough for the market to say Fed pause. Prices for meats, poultry, fish, and eggs decreased 1.2%. The index for eggs fell 14%. The largest decrease in that index since 1951. Okay, so anywho, yeah, what do you think? A little bit of risk on? Yeah. Okay, be careful because we're approaching, well, I guess it's still up there around 109. There's where we are approaching this other resistance area that I've already marked for you. So you have to decide now if you're in a buy dip mode. Okay, have you decided? Okay. Okay, I'm going to continue breaking down the report. Just want to go back. So the core is high. Still. Ooh. Very quickly, let's take a look at the other indices while you do what you're going to do. Okay, down, 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 yeah, but not much going on here. Aussie was one I pointed out in the Quant-in-a-Box video. So if you guys don't know, if the Quant-in-a-Box YouTube channel has a video that comes out every morning at 10 a.m. Okay, and this is one that I talked about for today and why it might go up. And then up in here is, again, based on technical analysis, not my opinion, risk of profit taking. So there's a fundamental reason why this move might happen. You'll have to watch it. Yeah, is it Oscar Mike? Ripple? I guess I can do that quickly. Yeah, wow. So is it legal again or what? Yeah, that's something. Okay, let's go back around the corner. Let's get back to euro dollar. Okay, it's gone back up. Looks pretty close to a 382, eh? We're right on that line, huh? Okay. You know what that line is? That's the bullish profit-taking zone for the day, okay? Day trading, okay? The day trading plan was buying here. Now, only if you're a bull. Okay? If you're, right? Look, bullish buying zone. It's labeled. Conservative profit target for that day, which is today. Aggressive profit target. And this was all drawn yesterday. See, we're calculating tomorrow's buy zone right now. Ho, ho, ho! So that by the time the day trading group meets at 4 p.m., those are usually already kind of set in stone. So anyways, it looks like the CPI is good enough for the Fed to pause. It doesn't show like out of control. Just a quick glance at it. Core looked okay. What we want to look at is super core though, right? Okay, so for that, you have to do your own research. Food, energy, less food and energy. Okay. The shelter index increased 0.6% over the month after rising 0.4% in April, so an acceleration. The index for rent rose 0.5 in May, as did the index for owner equivalent rent. The index for lodging away from home, hotels. Okay. So this is important. Okay. May, April, March. May, April, March. Ah, see, up. That's actually bad. The Fed's going to notice that. I don't know what percentage of retail traders are going to look at it, but this is important. Okay. So it went back up pretty significantly, right? And remember, Sky Killer says shelter's way too high. Now, the interesting thing about this is it's not that shelter inflation is 0.6. It's that it went up 0.6 from before, but before was up 0.4, and then before that up 0.6, and then before that up 0.8, and then before that up 0.7. So it is going up and up and up and up and up. So right now, the real number is 8%. Yeah. And it's not getting better. 8% rent. Now, why do we look at rent? An owner equivalent is if you rented your own home, what would you have to pay? Even if you own your own home and you have a $4,000 mortgage, that doesn't mean that that's what the rent will be, right? So anyways. So why do we care about shelter? Yeah? It's sticky. Thank you, Ashish. Okay. What's another sticky inflation? No, Richard says interest rate sensitive. No. Okay. Higher mortgages equal higher rent. Nobody buys higher mortgages, Sky Killer. That's the thing. Nobody is going to ask for a new mortgage unless they absolutely, totally have to. So, no, housing prices are going to be stable unless you absolutely have to sell your house. Well, you're going to have to take a big hit. So people are, people that are financially secure would never do it. Okay. So Henry answers the next question correctly. That is true. Wages are the other thing. Okay. And the thing is, high wages lead to more inflation because then you spend more money, driving up prices more. Okay? So it's a wage price spiral. Some pretty big numbers, huh? Nat gas is down. Look at all these negative numbers, huh? Okay. Heating oil, gasoline for your car, everything else, all down very significantly. So what's the biggest number? 10.2? Yeah. Yeah, I flew my father here a couple of months ago from California to Atlanta. That's usually a $300 coach flight. And it cost me $800. Yeah. Yeah. Well, year over year, used car prices are down, not up, Richard. So the big one, it seems to be shelter. So shelter and wages still an issue. So maybe people are breaking it down. Irrational exuberance is taken over. But again, like if I change this template, let's do this. Day trading bullish bias. We'll go there. We'll put this on a 15-minute chart. And I'll show you. Look, in red. Okay. The projected range for today was this, all the way to 108.17. What do you think of that? Okay, so that's market action. Another thing that you need to do as a trader using a chart is price action. So you mark this, and that's a potential buy, just like this was a potential buy. Okay. So there's two places really for bullish buying. Okay. Or boo, 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 boo. You have daily pivots like that, right? See, if you want the conservative target, you got to go into biased pivots, and you have to turn plot midpoints on. True. Okay. Bullish buying zone. Profit target conservative. So before the news, you could have been out of the market. And then after the news, right, hit the next target. So first target achieved London Open. Next one achieved New York Open. Done. Done. Done for the day. Favor says, what trade you're in? None right now on this platform. Most of the trades I exited last week because we were at targets and we have faced event risk. And the funny thing about risk is it's risky, and I don't like it. Yeah. So I've been focused on my AI projects that I'm building for you. Oh, my pleasure, crypto miner. I'm very concerned that you're not going to use it, and I'm just burning a pile of cash. So that does bug me. But I also, in the back of my brain, have this it's sort of like 1 in a million moonshot. Like, what if it's just crazy awesome? And all of a sudden, you build it expecting like maybe 1,000 people will use it. And you find out, 100,000 people are using it every day. Like, it just blows away your expectations. That would be cool. Yeah, I would probably need to get some sort of sponsor at that point because it would cost me a lot of money if it suddenly took off. And I'd like to keep it free, right? I'd probably, if it became crazy successful, I'd probably have to register it as a nonprofit or something. But it, to me, it is a project, right? The Aiden project. Oh yeah, forgot. I was watching this. Just shields up, red alert. Shields up, red alert. Shields up, red alert. Wink, wink, nudge, nudge. Aye, you know what I mean? Aye. Yeah, let's move around. Yeah, yeah. Nazi's on the line. Okay, Japanese stock market is the biggest winner today, and it's right on the resistance, just slightly more to get to resistance. Okay. I don't want to trade that way. Buy everything you say. I want to sell it and I can't let go. Now you're just some failed trade that I used to know. All right. Let me. Template, blah, blah, blah. And drop in maybe change this up. Hang on. Maybe do a conflu. Do a conflu. So close, huh? So I forgot I'm in that trade. I've been short USD Mexican peso since the middle of February. Huh? Well, I didn't find anything, Highlander, but I did speak to them about it. Okay, remember it's not them, it's a liquidity partner, so. But it's still very bullish. Yep, pretty interesting. Rand, okay, remember, or you may not remember, so let me point this out. This right here was our conservative projected high for the year. Look at the accuracy. Say what? Yeah. For the year, 19.8676. Now, actually looking at this chart, it suggests it can go higher to 20.8267 or 8287, sorry. Like, they're very precise. Right, Henry, and that would create dollar weakness, yeah. All right, so there is still plausibility. If you're going to use price action, you got to look at that. This is price action now. You're only looking at price, not market. And if you believe in continuation, you're going to look for that. And so you are now, if that's what your plan, so we call this strategy, by the way. Okay, so let's say your strategy is somewhere around here. We'll call it 18.5. You think there's a good possibility based on price action analysis and the projection we had on January 1st. See, on January 1st, we said this could go to almost 81. Okay, well, we're at a potential price. 1850 is a potential price to re-enter along. So what are we missing? If we got the right price, what do we need next? Time. What time? So your strategy is you think you might have an opportunity to buy a dip. And if you buy a dip around 1850, which was previous resistance, which now becomes support, then the target based on pivot point strategies would get you up here. So that's a big if then. But we don't know the when. When. So you mark your line. So let's mark our 1850. Boom. Okay, great. Drop into a fiver. And you say what? You can buy after you see a reversal pattern like a 1, 2, 3. You could buy a 5, 8 cross up. Oh, that was supposed to be black. Okay. Or you wait for the 2155 to cross up. Okay. They're all good. You make a decision. Only if you are a bull, and you probably don't want to carry trade this because it has a negative swap, significant negative swap. But you could day trade it up as long as you close your trade at before 459. And you could reopen at 501 and you'll be fine. Okay? Because you won't be charged rollover, and that's a negative swap. Okay? But the thing is, now you're on a 5-minute chart. Strategy's done. Now it's all tactics. Okay? Okay, so again, not a prediction. You're just reading a chart on a higher time frame. Okay, you're just doing the analysis, not a prediction. It'd be much more interesting, and again, now that I've zoomed out, okay, imagine now it starts to reverse. Okay, would it be statistically relevant if we saw something like that? Yes. Wolfpack says he's found that there's a correlation between the stock market and Euro Aussie. I'd be cautious about that. I'm not saying it doesn't happen the way you're saying, but I think that would be causation more than correlation. I don't think people say, "Oh, S&P 500 up, sell Euro Aussie." But it may be true, but think of it as, you know, what percentage of the world of the what, 7 trillion? What percentage of that 7 trillion is Europe and Australia exchanging currencies back and forth? Statistically, none. Compared to how much money Europe sends to the UK, how much money Euro sends to Switzerland, right? It would be statistically irrelevant. Okay, Aussie does a lot more business with New Zealand and China than they do Europe. They're a long ways away. All right, so then what's going on? Your Euro Aussie is synthetic. Imagine you have a Euro index and an Aussie index. What you're probably observing is when there's risk on, lots of money goes to Australia. But also, I would argue, lots of money goes to Europe. And yes, you might say it favors this right now, but is it truly correlation? I would argue not if it's synthetic. The way I'd rather you look at it is USD weakens. Okay. So just be careful. Just be careful. So if you normally in that situation sell Euro Aussie, you probably would do better buying Aussie dollar. So you might make 50 pips on your Euro Aussie short, but the same but opposite trade would probably, let's say, produce 75 pips. And you're taking essentially the same risk. You're making the same observation. It's the same strategy, just inverse. So there's no difference of skill level. So for all intents and purposes, it's the same trade, but one produces 50% better results. And they're both correlated, but one is probably more of a synthetic observation. Yeah. But hey, man, if it works, explore it and see, well, what else is moving? Is it like, answer this question through your own research, Wolfpack? What's happening in that scenario of risk on? Is Euro weak or is the Aussie dollar strong? Do some further research, and you can do that very, very, very quickly. Now, the old school way is you look at Euro. Okay, I'll get rid of that. That's cheating. All right, let's do it again. Okay, and you go through and you look at all these things. Is euro stronger than Swissy? Is euro stronger than dollar? Is euro stronger than Aussie? So you see Aussie's down right now. Great, like you said. All right, so let's inverse it. Aussie's euro is weaker than Aussie. Euro is weaker than Kiwi. Euro is stronger than dollar. Euro is stronger than Swiss franc. Euro and CAD are about the same, so both CAD and Euro are weak. Okay, and it looks to me like Euro is weaker than pound. So what have we learned? Euro is weak, CAD is just as weak as Euro, and US dollar is the weakest. So what are we missing? What's the next step? This is now the super bonus points, the difference between an A- student and an A student. What's the next step? Like I said earlier today, it's 6:30 in the morning on the Quant-in-a-Box video. I'm like Aussie dollar. Aussie's ripper strong, as Wolfpack points out, but US dollar's weaker than Euro. So you might be making money on Euro Aussie, but you would be making more money on Aussie dollar because dollar is weaker than Euro. So you're on the right thing, but not the best thing. Hey, that's all right, though. Win plays the show, right? Yeah. Hey, can I get a thumbs up for that? Was that helpful? Huh? Tell YouTube you're like, that guy's not bad, huh? It's not bad. Half of you don't care. Too much effort to click the button. Oh, I know. All right, cool. Well, then I will leave you to it. What a wonderful day. I'll see you at 4 p.m. if you're in my day trading group. And then tomorrow, I will set up a meetup for all members of FX Bootcamp, video-only members, day trading members, swing trading members. Every FX Bootcamper will be welcome tomorrow at 1:45 in the afternoon. And we will watch the FOMC rate decision and then press conference together. Oh, it's going to be great. We'll bring some popcorn, put some Cholula on it. Yeah, Cholula and popcorn. Yeah, maybe some Parmigiano Reggiano. Cray, I know. Bring some Takis. Some Coke Zero, maybe. Yeah. Yeah. So anyways, boop. Peace on earth. Oh, and look, I got my cufflinks for you, huh? See? They're hard to see, huh? Isn't that nice? Whoa! Yeah. Hey, and yeah, I was probably a little slow today, but I only slept 4 hours. And I've been working for 5 hours already today. So anyways, if I was a little slow or beat down or pissy today, I apologize. Didn't get much sleep at all. But I'm here for you anyways. Yeah. So peace on earth. May the pips be with you. May our profits be above average. Cheers.